Alright, welcome to the McBoss Capital channel. I'm Michael Chu. This is a market recap for the week ending May 24th, 2024. If you been watching this channel, please like and subscribe to this channel. I really appreciate it. And today we're going to do a two-part video. One, we're going to do the general market recap like we always do. After that, we'll also be doing another video for just trading stocks that are in the top 30 of my list and how I deal with trading those stocks. And we'll talk more into details, what my current trading strategy is, and whether that is something that you would consider or want to try. So anyhow, yeah, look for that video. It's gonna be out similar time as this video. So but for now, we're gonna continue with the market recap. For this week, Monday, the stock market sees more breakouts. Breadth was mixed as advancing stocks had a modest edge over decliners, but what the stock market lacked in breadth in makeup in breakouts. There wasn't much on Tuesday. On Wednesday, the S&P slumped 0.3%. It recorded a mild distribution day. Over the last 25 sessions, the large cap hold just 2 sessions of negative price volume action. Hence, the situation of this uptrend is still pretty much the same as Nasdaq. Afternoon selling hit the stock market following the release of minutes from the Federal Reserve. Policymakers were concerned that inflation remains persistent, and some would consider raising interest rates if price doesn't come down further. On Thursday, we have the huge new earnings report from Nvidia reaction. It did close above 1,000, I believe, and then they announced 10-for-1 stock split and also some dividends raised. But the market, reversed from the morning. So Nvidia, like I said, end up closing, I don't know, close to 10% or something above. But all the indexes sold off since the morning. It was really harsh day. Dow sold off 1.5%. Its worst day since March 22nd, 2023. S&P lost 0.7%, and Nasdaq, which was up as much as 1.2%, also reversed lower at 0.4%. And then the small cap Russell 2000 declined 1.6%, which is the most. After Thursday's losses, the S&P still up 10.4% year to date. It is the best first 100 trading days of an election year on record, based on data dating back to 1928. So that's interesting. Volume rose on the Nasdaq and New York Stock Exchange. Therefore, this would mean they add distribution days. That takes the total of Nasdaq to 2 distribution days, while S&P now have 3 days of institution selling. Following Thursday's weak behavior, IBD reduced its recommended market exposure to a range of 60 to 80%, and despite a power trend currently being identified. So we are in the power trend right now. Basically, it's when the 21 day is above the 50 day. Usually after certain, I think it's like 5 days or 10 days, I can't remember. But that's when they consider a power trend. However, most concerning is the bearish action currently. Both index staged downside reversals from new highs. So this is a downside reversal. And also they make an outside day, which is Thursday's price range engulfed the prior several sessions. So this is like really negative action. And then Dow Jones is also dropping to its near its 50-day. However, it did still close below the 21. It still dropped near to 50-day, and then it's closed slightly close below the 21-day. So those are pretty negative action right now on Thursday. On Friday, the bulls fought back, right? The Dow the end the week lower, and for the next week we have more data coming out. And then Nasdaq does itself off from Thursday's downside reversal and gained 1.1% Friday. So that was really good action. This allows it to have a weekly gain of 1.4%, and also it has a new closing high. So not an intraday high, but a closing high. It is now risen for 5 weeks in a row and is up nearly 13% so far in 2024. So we're going to jump to the Nasdaq chart right here. You can see every day this week was doing okay. It was going sideways, and then Thursday was the upside reversal day. Let's go to the 15-minute chart. So here's the gap up right here on Thursday morning because of Nvidia news, but pretty much that was the top of the day, and then it continued sell off, like, you know, even more throughout the day. So this action was really negative. It undercuts also like previous days low. And then Friday we have a gap up, like, so the bulls really fight back here and was able to close pretty strong for that day. So on the weekly chart, you can see now this uptrend since April, like, you know, almost like around April 20th. The uptrend has begun right here, and this is a very strong slope. We talked about it last week. You know, whether that will slow down, that's usually what would happen. It will go up really strong and then it kind of, you know, go slower, right? So usually that's what would happen. So watch for that. And also, but right now we are in the really strong uptrend, like 5th week of uptrend right now, which is really good. Also, like, you know, there's lots of things that contribute to all this volume, like including, like, you know, even the GameStop stuff. But anyhow, I don't know. But it seems like the volume is really high this last 2 weeks, which, you know, not a bad thing. But just you know, but the market, you know, in general, at least on the Nasdaq, appear to be okay, because Friday, as we see, we had a new closing high right there. But, you know, we're still not fully out of the woods yet, because we really need to make, you know, a new high, right? So that's there. Now this is the best looking index right now. As we go down to the other indexes, we'll see more weaknesses. And then we'll also drill down to the sectors. We also notice a lot of sectors are having lots of difficulties, which is really bizarre, because, you know, yeah. So anyhow, so this is the best looking chart. Let me jump back to S&P now. It ended the session on Friday with 0.7% left. Really didn't do much for the week. It is clear of its 50-day line, and also short-term 21-day, so that's still good. But it obviously lags Nasdaq, and it is still up 11% for the year. So let me go to S&P right now. So the chart is somewhat similar. You know, you can see here the Thursday close, like, downside reversal is very negative. It dropped to the 10-day, which is still okay. The green line is the 10-day. It's still far away from the 50-day line, which is the red line. But Friday's action, I mean, it did bounce back, but you can see it's no way near a closing high. So we're still under the water here. Whether this begins, like, so the thing that we're trying to understand is whether a new downtrend has started. Right now, if you draw, you know, it's only Thursday and Friday, but you generally draw a trend line across the tops of those days. But as more days come in the next week, we will have a better clue whether this is just a, you know, technical rebound on Friday, or whether you know, this actually is a beginning of a downtrend. So we don't know. It's too hard to say. But S&P, you know, is kind of in the middle range, right? We have Nasdaq, like I said, you know, the best performing looking chart right now for the index, and then we have S&P kind of in the middle, kind of like, you know, like if you look at the last 7 sessions, it's kind of like right here, the zone. So it's kind of stuck in this zone right now, right here. So we don't know if this is bearish yet, right? Because it has to pass this high to be more bullish, and if it goes down below this low, it will be more bearish. So so right now we're in the middle ground, right, for S&P. And if you look at the weekly chart, this one also managed to have a 5-week uptrend now, all closing in the higher, but this week it barely moved, which is not a bad thing. Again, sometimes you do need those weeks where you digest a little bit, and Thursday we have that, right? Because obviously any weak traders would be shaken out that day. Any tight stops has also probably been shaken out. So sometimes you're gonna have those days, but the good thing is, like I said, Friday we rebound, right? So that's the good thing, because a lot of people were expecting it to keep going lower, but it didn't happen. But again, doesn't mean it won't go lower, come next week, right? So just be mindful of that. Sometimes the timing might not be exactly what you think it would be. So, but right now, like I said, we kind of in neutral zone in terms of the indexes in general. Now we're gonna jump to Dow right now. Dow, it has a gain on Friday, but it was essentially flat, and then it suffered the first down week, right? So it shed 2.3%. So if we look at Dow, you can see the chart looks a lot uglier. We have the highs here, but look at where it is now. It's kind of starting to come back down to the red line, which is the 50-day moving average, which is closer to the middle of this trade, like this whole base here. And also the Friday action was very weak. Look at where it closed. It closed right at the bottom. It's almost like the rebound didn't help in any way. But this is very negative action. I'm not sure why Dow is so weak right now. There's Intel and Boeing that's not doing well, but just in general, I'm just very surprised how weak this index is. And obviously you can draw again across the top, you have a pretty steep down slope here for this trend line. And so so this is the negative side of the market right now. And we're gonna see, like I say, once we drill down to the sectors, you're gonna see more weakness. And that's the scary thing, because why all of a sudden Dow, which is doing pretty good, and then all of a sudden now it's like coming down at a slope that is so steep. And so is it anticipating some negative news coming up? So that's something, I don't know what that news could be, but right now it seems like some of the stocks on Dow is being sold off pretty hard. And usually I don't think one or two stocks could do that kind of damage. Obviously, as a whole, like the 30 Dow stocks implicate this is happening. So therefore there's a lot of weakness in the most of them are global stocks. So so pay attention to this, because I mean right now, like, we've seen divergence between Nasdaq and Dow, and S&P is, like I said, in the middle, more neutral. So we don't know who's gonna lead who. But right now, because of Thursday's action, we have to tend to lean more cautious, more negative a little bit, just because we're not out of the woods, right? Like I said, even on Friday's rebound. So let's be cautious about that, because usually when you think things are the best, or that's when things start to go down, and you just didn't sell, and then end up all of a sudden 10% lower on the index, back to the maybe you could come all the way back down here, and then you're like, oh, why didn't I sell earlier? So just be mindful of that. So let's jump to Russell. The small caps, and the week lower, even though Friday bounced 1%, it did find support at the 50-day line. So let's take a quick look at Russell. So here we go. So the Russell small cap definitely has a much more ugly chart and tone. You can see the bigger trends looks like this. This is the bigger trend. Now, where's the next trend going? I'm not sure. Perhaps it's gonna look like this. I hope that's what it's gonna do. It's going to rebound from here. So here's the 50-day drop right here on Thursday. Very sharp drop, as you can see, all the way to 50-day. And then on Friday, it rebound. But again, we're still under this downtrend line right here. So we are officially in a downtrend until we break this downtrend. Break above it. So let's see how that goes this coming week. So yeah, so this is probably you know, the worst of all the charts right now of the indexes. So be mindful of that. Jump to mid cap S&P. You can see this chart no different than the Russell, very similar, right? Fell to the 50-day line and then bounce on Friday, but again, the bounce are just, you know, somewhere in the middle of Thursday's range. So it doesn't really tell us anything. We're still officially in a downtrend. So so yeah, so there you have it. You have, you know, S&P mid cap that is also in the downtrend. So we have Dow Jones in the downtrend, we have Russell in the downtrend, we have mid cap, now S&P in the downtrend. So really, you know, like I say, the best S&P in general 500 is just more neutral. And then you have the only one that's outlier a little bit is Nasdaq, right? And again, even with Nasdaq, like, we're gonna dive into more details. Like, we're not seeing a lot of strength either, right? Like, you know, it seems like Nvidia, if it wasn't for Nvidia, probably Nasdaq wouldn't have gone up even this week. So just be mindful of that as well. So overall, this week is not a good week, right? In general. So you know, so again, we're not sure if this is a turn of the sentiment here. So let's see how that goes. So Monday is a holiday, Memorial Day in the US. So we're gonna only have 4 days of trading. So let's look at yeah. So next week we have Kawa, ANF, both of which I own right now, and they're both reporting. And then we have CRM, Dell, Costco, and PSTG also reporting. Also next week we have the Fed's Beige Book, which will come out on Wednesday, which include economic data from 12 different districts. There's also some Fed speak from one of the president, John Williams and Neil Kashkari. And then we have GDP revision, second estimate for first Q1 GDP on Thursday. And then we have advanced retail and wholesale inventories data on Thursday also. But the big event is on Friday, which is the PCE, personal consumption expenditure. So again, we want to see what the inflation means there. Core PCE is going to be seen rising 2.8% year over year. Headline PCE is going to be 2.7% on an annualized basis. And then the month over month core PCE is going to be 0.2%. So that's what is being expected. So those are the news that we'll be anticipating next week. Also, the IBD 50 also popped 2.2% on Friday, which also really underlying the outperformance among growth stocks. So the ETF now is near the buy point here of a cup base. So let's look at that. FTY. So here we go. So here's the nice cup base, and we are, you know, just on the tip of the buy point right here, 28.35. So pretty close. So this is yeah, so this is really good action. You can see this uptrend really nice. Has this really strong slope. And again, this is the IBD 50 list. If you subscribe to IBD, you will get this list. And on Thursday, you can see it surprisingly didn't do that bad, right? Like, you know, on Wednesday it fell, so it fell a day earlier. But Thursday, I don't know why it fell on Wednesday. And then Thursday it didn't really fell as much as the market did, which is a good sign. And then Friday it came back above and make a new high. So it looks like there is some appetite for growth, which is again very interesting because yeah. So this is actually surprising to me. Now that I'm looking at it right now. So maybe growth have a chance. So that would be good news if that's the case. Let's look at equal weight S&P. Again, we are seeing similar action here, downtrend line. Right now it's on a downtrend. RS rating has been really dropping. So this also signifies the market breadth is not expanding right now. It's been contracting in the last week or so. So this is another negative. We'll go to QQEW, which is the equal weight Nasdaq 100. So we have this reversal on Thursday, and then Friday it rebound a little bit, again small in the neutral zone right here. Not really telling us too much. So this looks slightly better than the equal weight S&P. So what happened this week is a little bit, we already mentioned it on when we recap the week. The Fed notes show that some people are in the members are not too happy with the current inflation progress, and they did some, I don't know how many, it didn't mention, are actually considering a rate hike. And after that came out, the market really did drop on Wednesday, and then the yields are the 10-year yields kind of jumping a little bit, and then on Thursday it continued that trend and it jumped again, and then on Friday you can see it reverse a little bit, and hence the market kind of also do the opposite, right, which bounce a little bit. So right now this is probably something to watch, because we are on this trend right now, downtrend still, which has given the market the ability to rebound, which is very similar, like, because right here, if we look at the date here, April 25th was the top here. The market start rebounding about April 20th, so very close, and now we're starting to hit this hiccup here. If the 10-year yield jump above this, that could be bad news for the market. So that's something to watch out for in the coming week as well. But it looks like it's found some support right here, like after it hit this 200-day line. Here's the 50-day line right now, which is sloping upward. So that also give it momentum to be able to move out here, right? So so even if the market does kind of have trouble going forward, doesn't mean all stocks will come down. One of the things I've seen and learned is that not all stocks top at the same time, and same thing on the bottom. Not all stocks bottom at the same time, right? So some will top faster than others, and some will bottom faster than others. So just remember those things. And anyhow, again, we'll be doing another video right after this to talk about currently my trades, and hope you will follow that video as well. So the US dollar has also been rebounding slightly. You can see right there, after a kind of a downtrend here. It tried to pop out on Thursday as well, similar to the 10-year yield, but it kind of fall back here a little bit. So yeah, we'll see how this do as well. And then we have oil. So for the oil, we're still in a clear downtrend right now, but it is starting to find some support at this lower level. So you can see now, it has come to that level twice. It hasn't bounced off it much. That's why this downtrend line is so important, because it's getting close to having to make a decision whether this is a pendant pattern, which forces it to make a decision which way it could go. So watch for that. And then we have gold. Gold also came off. You can see this week it suffered a pretty big reversal here from the last couple of weeks gains. And also on Friday, the rebound was so weak it closed at the bottom. So looks like this 50-day line will be challenged most likely. So this chart, a lot of people talk about this. Are we too complacent right now? Because the wicks hasn't really rise. Even recently, you can see Thursday it rise, but it's not that much. It actually even didn't close at the top, despite a very negative day, right? So that's very interesting. And then on Friday, it came back down again, really fast. So, generally look at the previous lows here. We are now in the lowest low in terms of volatility. And so it does, kind of show a little quite complacent type of market right now, which is always not a good thing, because when people get complacent, you get shocked easily when the selling comes, and you just didn't want to sell because you think things are too good. And so just be mindful of this. Just gonna take a quickly at the stochastics. Basically, generally, when it gets up to here, that could be, possible turn coming. And you can see in the past, it hasn't stayed up there long enough, right? You can see right here. Like this is probably the best case scenario. Is like, it goes up and then it kind of come back a little bit and then come back up. And then we have this one again. So this was basically, from November to February, March. But you can see it's just starting to come down. So this is the best case scenario, really. Like this is November to close to end of March kind of rally. But most cases, it doesn't stay up there for a long time. So we are really high right now, probably pretty close to this high right here. So yeah, I'm not sure how much more room it will run, but this obviously this rally is very young. Like I say, we bought them around April 20th, so just still early, like slightly over a month. So generally, uptrend will last longer than that, like 2 months to 4 months. But again, we just have to be cautious because a lot of signs are more negative than positive. So that's one thing. The next thing we'll look at is the Atlanta Fed GDP right now. It's pretty high, 3.5%. It has come down from above 4% risk at the beginning of the month, but now it's slowly dipping back down. But like I said, 3.5% is still pretty high. Let's look at the fear and greed index. We are neutral, which is quite surprising, because it has shot up, and then honestly this week it came back down quite a bit. Again, I'm actually surprised with this sentiment. So usually that's a good sign, because people have dumped quite a bit of stocks. This one, again, May 22nd, right? This is Wednesday, so it doesn't account for, I don't even know if it accounts for Wednesday, but because it depends when you do the survey. But for sure, it didn't account for Thursday's action, which is very negative. But you can see the number is super bullish, 47%, which is pretty high, because the highest was 52% in the last year. And also the bearishness surprisingly also went up, so 23 to 26. And less people were taking side, like people were less neutral, so people would jump to the bearish side, and there's a lot more jump to the bullish side. But again, all this happened before Thursday, so it could have been coming back down right after Thursday. So but yeah, the CNN Fear Greed Index actually show how much it has dropped, surprisingly, this week. So IBD has confirmed we are uptrend since last week, but this week we're starting to see more distribution days, especially Thursday was the big one. So we actually have 3 distribution days on S&P now, and 2 on Nasdaq. Also, in terms of accumulation distribution, we're seeing, on this side, we're seeing the industry groups are slightly better at the beginning of the week, and then by the end of the week, it was much more negative. So even with Friday's rebound, it didn't really help much. And same thing with the number of stocks being accumulated was okay at the beginning of the week, and then by the end of the week, it really started to drop. So this has been, this is kind of a little bit negative right now, again, because, we're seeing more distribution. Also on the sector side, you can see, even at the beginning of the week, retail's have been suffering the whole week. Health also been suffering the whole week. And then we have commodities and financial pretty much, didn't do as well by the end of the week. And then we have tech, tech, it's okay. And then it was, the best at the beginning of the week, and then it has kind of given up as well. And then we have industrials that kind of more neutral. So, yeah. So that's, the kind of signs we're seeing. Again, we're seeing net distribution right now, which is not a good sign. Let's jump to the IBD signal here in terms of their accumulation distribution. So right now it stands at D for S&P, and Nasdaq is at D plus. So it was at D, and then now it became D plus because of probably on Friday. Dow Jones also D plus. So obviously A is the best, but E is the worst, and we are not doing well in terms of accumulation distribution right now, despite we have come up, from the bottom, right? So we're still at D. We haven't seen much accumulation in general. Advanced decline line, I was really surprised how it dropped really fast this week. You can see this drop like couple days. It dropped really fast, but it did bounce back on Friday on S&P, so that's good. On Nasdaq, again, same thing. This one has always, we've been talking about this for a long time. It's definitely the weakest advanced decline line, and you can see the drop also happened really fast here. We did have a rebound, slight rebound on Friday. So again, overall, this week looks more negative than positive. So again, the breadth is not there as well in terms of any sort of accumulation. So those are things to pay attention to. Okay, we're gonna go over the sectors very quickly. The SM Spider sectors. So this is XLK technology. You can see we have the top here on Thursday, and Friday's rebound was pretty much only around half of its range on Thursday. So technically we are in the downtrend now, unless we break above the high. So this is probably the best looking sector right now. So we're going to jump to the next one. So the communication services, surprisingly, this one did pretty good on Friday. Considering Thursday, it dropped all the way to the pink line, which is 21 day. But on Friday, it pretty much recovered most of the losses. So that's actually quite amazing for this one. So this is communication service. Retail, this one is on the downtrend. Again, I'm like as we saw earlier as well, the retail is not doing well for some reason. I don't know if that signifies worse, more worse consumer spending or whatever, but that seems like. And then you can see discretionary is also on a clear downtrend. In fact, it kind of accelerated this week. And then we have staples. Even the consumer staples are going down, so that's also negative. And then we have XLI, the industrials, also very similar to the Dow Jones chart. And then we have the materials. So the materials are also kind of going down as well. It did rebound quite a bit it did recover most of the losses on Thursday, so that's a good sign. So we'll see if this can come out. Utilities, this was on a really strong uptrend. I think CNBC was talking about this almost every day, every hour. So but anyhow, it has also given back, but Friday it did recover most of the Thursday's gain, so this could also be a good sign. Watch for this to break above this downtrend. Healthcare, you can see it also on a slight downtrend now, and you can see Friday it didn't recover at all. Now volume is starting to dwindle down, so maybe volume is it's almost time done selling. Usually when volume start to come down quite a bit, that's usually when it's done. Energy, you can see energy is probably not looking like, not only the chart is not good, but it's just coming back down to this. See Friday where it closed, it should be bouncing up, but then it closed near the bottom. Looks like energy might be heading lower. And then we have financial. Financial is also on a downtrend. Again, Friday didn't really recover much. It's more neutral, like in the middle of Thursday's range. So this downtrend is still persists. So in general, you know, when looking at all these sectors, we see more negative. Like most of them are in the downtrend, except technology and communication services. Like most of them are all in downtrend. So whether this will lead to a bigger pullback or correction, we don't know. But a lot of them, you can see they're coming down to the 50-day. So they tested once now. They could be testing it again in coming week. So just be careful, because you know the second time it could break. So watch out for that. You can see the real estate sector is also not doing well. This week I think like a couple guys reported like toll. Yeah, didn't do well at all on earnings, so it really bring down the whole market in that sector. Yeah, before we jump into the individual stocks, just want to quickly look at SMH semiconductor sector ETF. You know, you can see here the uptrend is pretty strong. This is probably very surprising that this index is doing, this ETF is doing really well. This group, this in general, this group. And now not every stock's doing well. We'll look at some of that, but really Nvidia powered this to a new high this week on Thursday. And Friday, surprisingly, it was also followed through. So I think that's the main. Now, with that being said, not all stocks did really well even in that group. But let's start with Nvidia, because that was the big news this week. You know, right here you can see the earnings growth is 400% to 500% in the last 4 quarters. That's probably the most impressive that everyone's been saying. No one has seen anything like this for such a large cap company, like 2.6 trillion worth now. And I checked earlier, Microsoft is around 3.1. So we're getting closer and closer to, you know, possibly taking the #1 market cap in the world. Yeah, on the weekly chart, this looks perfect. It's a nice base right here, and it broke out, right? So definitely buying opportunity here, even after the breakout, even after the earnings news, just because this is coming out of base. The last time we had base was around here, and then we had this sharp run right here. And the same, you know, the first initial base was right here, and then we had this sharp run. Let me take out my markups for a second. So see better now. Yeah, so here again we had a little small base. This is the first base, second base, and then the third base. So we are still early in terms of where this base is. So that's why it is 9% from this pivot point, meaning it has gained 9%. So generally IBD rule is, you know, take profit around 20-25%. So this might still have room to run. So just some consideration in terms of timeline. Now IBD does have a rule when it goes up 20% in the first 3 weeks. So you can see it highlight here, 23% after the first 3 weeks, or any time before the 3 weeks up. It will pop up this message that's give you how much it has gained, 24%. So they do have a rule where if you gain 20% or more in the first 3 weeks, you should hold it for 8 weeks. And that's what happened here. It gained more than 20% in 3 weeks, and then you can see Sorry, now I have to put on my markup again. But you can see the run is way more than, yeah, you can see, like, once you see that 20% gain, it runs up for more than 8 weeks sometimes. So that's why they recommend at least holding for 8 weeks, because it could be a big runner. And this is a classic example of both of those bases right here. So now we're forming the third base, and we'll see if we can make 20% in the first 3 weeks. If it does, then generally you should consider holding the 8-week rule. Now, of course, you could give up all your gains. Just make sure you put wherever manage your risk that way, where you want to sell it. Don't try. Make sure once you have a gain, do not sell at a loss, right? So put a stop somewhere, that you feel comfortable, so you don't lose money, because at the minimum you shouldn't lose any money now that it has a gain. So anyhow, that's Nvidia. Now there's other chip stocks that I see doing well, like Qualcomm. Obviously Qualcomm, the one thing that had going for them was the Microsoft Copilot PC is using their chips right now for all the new Copilot PC. So that probably right now, look at this chart, is very strong, and a nice breakout, and just nice, it's almost at 20% gain. And then we also have TSM, Taiwan Semiconductor, that is also doing well. You can see right here, it just broke out not that long ago, and again, it's riding the 10-day line very smooth. Impinj is another one I follow that's doing quite well. It's starting to show some weakness right here. It didn't rebound on Friday as the market did rebound. Now the volume is dwindling down, so not sure, at least on the sell side, so maybe that's a good sign. So anyhow, but this is came up from this base, and it gained quite a bit very fast, and then now it's digesting. But yeah, the stock hasn't give up. It's riding the 10-day line, but like I said, the 10-day line is starting to curve a little bit. Not sure if that means it's giving up, but anyhow, yeah, so that's one of them that's doing okay. We also have Cyrus. Cyrus is also looking pretty strong after this breakout. You can see all the ends are showing up here. Again, some sort of accumulation happening, and the selling has been very subsided, and the 10-day line slope is super strong. Another younger company, Form Factor, also looking very strong right now. You can see this breakout right here, pull back to 10-day line and bounce off, and looks like now it's digesting again, so we'll see if it will bounce again. Nova, MVMI, also doing okay after it breaks out. Here's the slope, again looking very strong, like only have one red day in the last like 10-12 sessions. Next we're going to jump to the software group. You can see Thursday's reversal very bad, but Friday actually closed down even lower. It did rebound off the bottom a little bit, but overall it just stuck at this 50-day moving average, which is coming down. The 200-day is rising very slowly. So again, the Friday's action is not as good as the general market rate. It actually went down lower. So with that being said, let's jump to the big cap guys. Microsoft. So Microsoft Thursday, again, I look at Thursday as a very important day, because that signifies a market trend may have changed, which is towards the downside. Now, when we look at the individual stock, we want to see how it reflects against the index, and looking at the relative strength is one way to look at it for sure. And also, like you can see Friday here, it bounced back. It did recover most, not all the losses, but most of the losses. So this stock is still acting pretty well. It hasn't come out of this base yet, but it's very near it. So we want to see how it also reacts. If it does come out, does it just power through the buy point and never come back to it? That'll be the best sign. So we'll see how that goes. Then we can look at Amazon as well. So Amazon has been on a downtrend. Now the only thing that I like about this is that it is trading super tight. Like, I mean, this is really tight. I mean, and the volume is starting to die down very significantly on the sell side, versus, like, you know, here is a little bit more loose, right? But here now it could still happen. Like, we could have a big down day like this here. But that was yeah. So that was the I don't know. I can't remember what happened that day. The earnings is this one. But anyhow, but it's just trading really tight, which is a really good action. So that's Amazon. Google, still trading near the highs. It has pulled back a little bit. Thursday's action, not good. And then Friday, the rebound is very mediocre. So again, you know, I don't really like seeing that Friday week rebound. So let's jump to Meta. Meta looks slightly better just looking at the last 2 days of action. But overall, you know, this is still look like a downtrend to me. And then you have the 50-day there. It just seems like a ceiling right here. So this will be the second time now it's trying to test this 50-day line, red line. Yeah. Let's finish the big cap with Apple and Tesla. So Apple here has this nice decent bounce from the bottom, which is you know, a lot of the AI hype around the conference coming up, that they may showcase new devices that are with AI capability. So yeah, I forgot to mention Microsoft at their conference this week, the developer one. They also came out with the Copilot PC. So now maybe Apple's turn is coming up in June to showcase that as well. But anyhow, it did recover most of the losses from Thursday, so that's a good sign. Yeah, on Friday IBD Live, Charles Harris was on it, and he's a big Tesla, you know, stock owner. He did talk about this. I mean, in general, like, you know, the way I interpret this is, you know, we have this strong rebound at the bottom, which is significant. I think 138 to 198 in like a very short time frame. All the shorts are getting killed here, and then we give back, and it starts to slide down and slide down. Now, nothing too negative. The one thing, you know, that has happened here is it has tightened up, which is a good sign. So volume has really dwindled down. You know, it could be a positive because, you know, if you're expecting people to sell, at least on those down days, it's not much volume, so it could be a positive thing. But overall, I still think this stock is in a downtrend. But it is above the 50 days, so that's the good thing. But, you know, I mentioned this before, is that when it goes above the 50-day and it doesn't move much, like right here, it didn't move much, even though this one did bounce up and then it just gave up. So, like, you know, when you see that kind of action, there's not much promise that, you know, people want to accumulate shares in this stock. Generally, once it goes above the 50-day, you want it to see it bounce really strong. But this is not a strong action. So, you know, it could do something like this where it just bounce a little bit and trap a lot of people and then go down a lot further. Or it could just, you know, from here, it breaks this 50-day, then we're going to start seeing a lot of selling coming again. So not sure what will happen, but like I said, as to me, this is still looking more like a downtrend than a break above towards an uptrend. All right, we're gonna now dive into the stocks that I follow. Before I continue, I'm gonna be making another video right after this. We will dive into how I come up with this list, and as well as how I actually trading the stocks right now. So hopefully you will find that video and follow that video. And yeah, I'll be diving into details my trading strategy that I'll be sharing. But for now, I'm gonna just quickly highlight what this week, how the stocks are doing in general, who's in the group. So we can see ZIM, transportation ship, industrial is number 1 right now on the list. It's sorted by price performance, and I chose April 9 as my baseline. But really it's like starting April 10, which is the Fed day. And then the next Fed day is May 1st. Again, you could choose that day, or you could choose where the bottom of the index is. But anyhow, we'll dive into that more in detail in the next video. But for now, yeah, this is sorted based on performance. So these are the best performing stocks on my list. And you can see Zim is already up 100%. Transportation Ship Group. There's another one, CMRE, just came up as well to this top list. And yeah, so that one's in that one. Then we have Computer Software Enterprise, AEYE, in the Technology Group, WGS in the Biotech, ASPN in the Chemical Specialty, Vital in the Food Meat Products, Power, Electrical Power Equipment. So those are around 50% gain right now. TMTDX is Medical Products Group. First Solar really powered this week. They had strong earnings. So let's just jump to that chart. So again, I'll be diving into more details how I'm trading these stocks right now. So this is the really powerful move right here in just a very few short sessions. So if you blink, you probably miss this. Yeah, anyhow, it's a very powerful move. It just came from out of nowhere. BLBD, Moderna, Oscar, ASC on the transport pipeline. Kawa is really doing well. FLNC in the energy alternative order. CRS still. Snap, internet content. HRO, medical biotech. ATGE, which is the education. We already talked about CMRE. GEV is a stock that Charles Harris has been talking about on Friday that he owns. AWAF, Aerospace Defense. PI, we talked about that. CAMT, PHG, Diversified Operations. FN, Electrical Contract Manufacturing. PDD report earnings this week, and they well, they report last week, I believe. I can't remember. Let me see. Yeah, I think it's either early this week. Yeah, no, this week they reported. It didn't, you see, it kind of closed at the bottom of the range, which is, not very good. But the next day it followed through, right? It gaps up and followed through. So now one thing that, Charles Harris was actually talking about this stock, he didn't like how it closed at the bottom. Like people are selling, I don't, yeah, you can definitely you can take it that way, but for me the fact that it still closed up is a good sign, and even the fact that it closed up keep going up higher and higher 3 days in a row is also a good sign, because that means that people who want to sell, there's probably lots of what they call overhead, and all these people here, they probably stuck for a long time and now they're selling as it goes up. But that also means that it could go up even higher, because all those people who didn't hold, they sold. That means those are the last people to sell, right? So anyhow, that's why, IBD strategy, they tends to buy on breakout, because for this reason, as it goes up higher, there's less and less supply coming to the market, and so the stock can move up more. So yeah, so that's PDD. Again, they had a news paper article about this. Temu is the app that they sell stuff similar to Amazon, and they're really like, I'm telling you, I'm on YouTube and every second ad is a Temu ad. That's their strategy. They're really trying to capture people to use the app, and once people use it, they're hooked. And because so anyhow, they're really competing with Amazon, and I mean, the earnings were superb. You can see right here, like 185%, 102%. It's really growing right now, and Jim Ropel always talk about this stock, how it's so underpriced right now despite the growth that it's getting. Yeah, anyhow, I feel a little bit excited about this, that it's finally moving. So VRT, which is doing really well in the industrial, keep making new highs. PRCT in the medical system equipment, Lantheus in medical products, NF retail apparel, so this one is coming back again. THC in the medical hospitals, HG in the insurance, HWM, aerospace defense, BMI in the machinery industrial, Twist in the biotech, TME, internet content. We have CLS in the electrical contract manufacturing, NVIDIA in the, we talk about that. Gas is a transport pipeline onto electrical equipment, NSSC security safety, with CTR finance investment management, KD computer software enterprise, AGYS computer integrated. Again, you're starting to see there's really no one domination in terms of sector. You see retails, you see technologies, you see industrials, you see financial, not as much financial, but yeah, you see more commodities. You see some commodities, not a lot, but a few. And yeah, so we have AGY, GMAT, KEX, USP, USAP, Cirrus, Form, on coming back up. NVMI, we talk about that. Shark Ninja is here as well. So you can go down this list and you can see like a lot of good stocks here doing well. Just lots of stocks still doing okay, right? And so when I look at this list, these are these are fundamental stocks that I pick out that is really strong, and then on the chart side, they all look pretty good. They're all performing well. You can see most of them are around 20% gain now, even at this level. And all these stocks have gained since the April 9th. And even when you get to the 100 level, you still see like JD down here at 13% gain. So overall, these stocks are doing well still, and that also we talk about the IBD 50, which is also very similar to this list, and it might not have some of the illiquid stocks because the stocks I have on here is not I don't filter based on how liquidity is, but on the IBD 50 they probably do. So yeah, but on that list it's doing well, and on here it's also doing pretty well. So at least the growth side still has some momentum. Again, I'm going to dive into these stocks with more details in the next video. Please find that video. Hopefully I'll try to put a link as well in this video to link to that so you can find it easily. But yeah, thank you for watching, and please like and subscribe. Thank you.